Good morning, everyone. Welcome back to Commodities Update video. Today we'll be looking at technical analysis on natural gas, UNG, the US dollar, oil, gold, and silver. So we'll be looking at their support and resistance levels, as well as a couple patterns and what's the most likely scenario price to be heading into later next week. So let's get started with natural gas first, NG on the daily time frame. And make sure to click this B80J adjusted for contract on this bottom corner right here. Right side, so that your chart won't have these contract gaps. All right, so last week I talked about this inverse head and shoulders forming, and it pretty much played out exactly. I remember talking about this on the weekend of last week. So this is the left shoulder. This is pretty much the head, and we just pretty much started to form that right shoulder. And it doesn't mean that it's gonna form, but so far it's looking, we need bulls to start bouncing pretty soon here for us to form that right shoulder, because you guys can see we don't have that much room. The left shoulder's here. We don't want to be too. We don't want to break below the left shoulder. Even if it breaks below a little bit, is okay. But if it starts, get a big red candle below it, then that pattern is gone. And we're probably potentially looking for more of a tightening range, where it just kind of sideways action if we start to retrace closer to these levels. So ideally, bulls show up pretty much Monday right away, or a slight red day, and we get a lower wick, and then we end up closing higher, and then potentially get that bounce going. So those are two scenarios bulls want to see to get that inverse head and shoulders. Inverse head and shoulders is a bullish pattern. It's just a psychology of it. It's a downtrend into an uptrend. So nothing fancy, just a downtrend into an uptrend. If we can break above this right shoulder and head higher from breaking that point, it just nothing fancy here. Downtrend to uptrend. So let's see if bulls can show up, right? Two scenarios: lower wick, we come down, bounce, get that lower wick form, and head higher, or we just bounce right away from here. If for the bears, you want to take this break below this side's low, and then it will potentially head a bit lower. We'll be looking at that 70% retracement. If we start getting closer to 70 or 80% retracement of this move, then we're starting to favor the bears on a next bounce. But we have to see if it actually happens. But if that happens, then we're potentially looking for that closer to this tightening range down here. So the two scenarios for bulls and bears. As of now, no signs of the bounce yet. You guys can see we pretty much close at the low of the day, meaning we could have gone lower if there's more time. They could get a slight tiny bounce overnight, but yeah, let's see if we get that bare minimum 15-minute uptrend. We got a decent 15-minute move, and on our next retrace for the 15-minute, let's see if we can confirm 15-minute uptrend. Then maybe the bounce would be on its way if we get that 15-minute uptrend confirmed. But for now, bears are still in short-term control, because longer term on the hourly, not the hourly, I'm talking about the daily. Daily is still favoring the bulls a little bit, but it's starting to break pivots. This was the prior pivot, so that uptrend is gone. So currently it's a neutral trend, but because of this bounce size, we have only retraced roughly 40%. So that's still favoring the bulls on this bounce. So we don't want to see it break below the 50% mark. If we start breaking below the 50% mark and closing down there, it will start to favor the bears on the next bounce. So far, daily time frame is favoring the bulls slightly a little bit at this moment, but they need to show up pretty quick. So that's why Monday and Tuesday is very key for them. All right, UNG, similar idea. UNG pretty much follows NatGas, just different contracts, different months. Same thing, inverse head and shoulders. Let's see if we can get that bounce going and come from that downtrend into an uptrend. So we also broke this pivot as well, so now it's in a neutral trend. And yeah, let's see if we can do that. If natural gas actually confirms that inverse head and shoulders and break above the neckline, this will break above 15.22 and head higher. Let's see. yeah, if we had the higher break above this inverse head and shoulder neckline, which is pretty darn clear resistance right here, right? Support, prior support, now activated resistance and resistance on that both bounce on that inverse head and shoulders neckline. So very, very clear resistance there. So if we can break above that, then we're potentially looking up closer to this 2.5 area, which will probably coincide with closer to the $16 area for UNG. All right, I did the stock market update video on Thursday, so check that out. If you guys are looking for QQQ as well as the 7 mega cap techs, yeah, check the previous video out. And let's continue with commodities. So US dollar. So after that longer term bear break on this equilibrium that we've been talking about for many months, the weekly time frame. So big move up, big move up, big move down, big move up, big move down, big move up, and it finally broke bear out of this tiny range. It was pretty what do you call it? It's pretty predictable it was going to break bear because of the incoming rate cuts. So whenever there's a rate cuts, the dollar weakens, and we are pricing in a lot more rate cuts than we thought we were going to have. So September is currently pricing for half a cut at this moment, 0.5%. If that ships, then it would shift the dollar a lot. So let's say if it's starts pricing a little bit more rate cuts, then the dollar potentially may head lower. And if it starts to ship into a potential just a 0.25% cut, then we may get a little slight bounce on the dollar. And yeah, you can see it's pretty weak lately after that break, after that bear break. So we'll see. And pretty clear support, triple bottom right here, but fundamentals, I would say, outweigh technicals on at least on the dollar. For other stocks, it doesn't. Sometimes it doesn't do that. Just you gotta know the characteristic of what you're playing. For the dollar, fundamental definitely outweighs your technical on DXY, because what is this support if all of a sudden we get another rate cut increase, right? That's not gonna do anything. It just tank right through it. Um, so just gotta know the fundamentals when you're playing the dollar. And if you guys want to learn more about techno analysis or deeper into how to get better at trading, create your own trading plan, or get funded in prop firms, go to that Patreon link in YouTube below and check it out. All right, let's take a look at oil. So oil is still doing its thing. Super clear, super clear. Tiny range, can't be more clear than this. We move up, we move down, bounce, 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 bounce. All the moves are within the prior move. You can see every single move is within the prior move. Same similar here. It never breaks to a new low or higher high or a new high, and it's still tightening out. So once it breaks, we can play that, because when it breaks, they will have volume come in. So far, hasn't broken yet. So we'll just wait until it breaks, or you can play with this range. Right? It's been super clear. We've been talking about this for months, and you could have been playing this range this whole time on both ways. All right, let's take a look at gold. All-time highs. So after it broke, there's this resistance here, resistance, right? Third time rejection, and we broke above. So now what bulls want to see is when we do back test it, like I said, we pull back a little bit, right? Touch this line, will it act as support or not? The best case scenario for bulls is it acts as support, and then we bounce, and we form some kind of sideways range around this area, form kind of like this. So it would form some kind of support along that zone, and when it back tests, you know how look at this back test, right? Back testing this level of support. Bulls held it, and next thing we know, we go. That's the best case scenario for bulls. Last thing we want to see for bulls is breaking above this resistance, and tomorrow we get a red candle. That'll be a bull break lacking follow through, and we may potentially get a little bit more downside. That would mean that this resistance is still valid if we get that red day tomorrow. Yeah. So we'll see two ways, and if that happens for bears, then we're probably potentially coming back down to this 2393 zone. And for bulls, just sit tight. Your all-time highs. There's no resistance, right? Just let it ride until you see signs of red flag. But for now, no signs of red flag yet. And let's look at the silver. So silver. All right, so good sign. Although silver is not back to its prior high because it's been relative weakness. We've been talking about this. Don't play the relative weak one on the bull side. Short the relative weak one. It's finally catching up a little bit. You can see on Thursday, um, gold's barely bounced, right? Look at this. It's like 0.34%. And look at the candle on silver, 3% bounce. So when I said you want to keep watch when relative strength shifts to relative weakness shifts to relative strength, because that'd be a good sign for silver to catch up. And it did. So either way, it was gold rolling over and silver roll over more, or it was gold breaks out and silver catches up. So that's what silver's been doing the last 2 days. You can see on that 0.34 day on gold, silver printed a close to 3% move. And then also next day has a big move for gold as well. So this is about the same. But Thursday is definitely relative strength. So that was the first day we can see some relative strength after hitting support right here. Very clear support, right? This is a prior resistance. Now acting as support, also coinciding with this $26 sideways range support. And after it hits support, it starts to show some relative strength. So it's a good sign. If you're a silver bull, now I can see relative strength. But the thing is that you just gotta be wary. Can gold keep going, right? If this prints a red candle, right, then this momentum is probably not gonna last that long. So we'll see if gold can keep going on its all-time highs. All right, that's all for you guys, and I'll see you guys next week for more updates on the stock market as well as commodities. And have a good rest of you guys' weekend. Feel free to comment below if you guys got any questions, and see you guys soon.